do the disclaimer. Haha, sorry. All right, come on, let's go.
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website www.optionsclearing.com to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
All right, fantastic. Thank you, Miss Computer Girl. All right, so meanwhile, okay, lesson number 1. Do not chase. You saw what I did. I put a sell here, I put a sell here. I'm going to average, we average 40.99 for the shorting price. It's going up a little bit now, but whatever. But the point is, I did not chase down. Don't do that. If you chase down, you're not getting the price you wanted. It's going up now, I'm not getting the price I wanted anyway. But the point is, if you want to pick a price and you want to short, just put your marker there, offer to sell it, and then wait. There is no sense at all in chasing and paying you're paying $50 for each penny here, or whatever it is. Well, whatever it is, $10 per penny. Wait, no, 100 pennies, $10. You're paying $10 for every single penny here. Costs you $10 out of your pocket. Why would you chase something? You know, you're happy usually to make $100, $200, and you're going to sit there and pay an extra 10% of your money every time you make a trade. That's a bad habit. Don't do it. Do not chase things. Things are going to go, when you hit significant lines, that's why I like shorting at significant lines or going long at significant lines. When they're at a significant line like 40, 50, see what happens? Hitting it. Okay, that's a long time. Yes, it got away from you, but then wait. Let it come back. If it doesn't come back, bye-bye. Get the next one. You can't chase things. You have to pick a line that you feel is going to be the proper range, and I felt that 41 was going to be the top of the range. Then you got to put your foot down, make a bet, and now reasonably, if we get to 40.75, we're going to make $250 per contract. And we're going to be very happy to make $250 per contract. If we don't get to it, I'm willing to ride this out. I'm even willing to go to 42.50 and double down. Why? Because what I was saying earlier in the chat room. Is this a chat room? Nope, this is last week. There we go. We got to talk about this article too. This is a good article. I read it again. It's really good. Some great writer here. So later up, we were talking and we talked about, what the hell were we talking about? Oh my God. I got so sidetracked. I had a chart, right? Didn't have a chart. Oh, gasoline. There you go. I knew it. So what happened today? Here's the petroleum report. There was a 5 million barrel build in oil and a 5 million barrel draw in gasoline. That's nothing. Distillate's up. So basically, the week into July 4th, and July 4th was Friday, Saturday. What the hell day was July 4th? I forgot already. Saturday. July 4th was Saturday. This EIA report, we're going to refresh that. June 26th, I hope not. This can't be right. Oh, maybe it was too soon. So if the one before ended June 26th, Sunday, nope, that's June 26th, sorry. So it's a week ending June 26th. We should have one that ends July 3rd, but then who knows what happened with the reporting. You know, there might be some weirdness in this whole thing. This isn't the one though, right? Because this is decreased by 7.2, and this came up by. This is not the same report. So we're still waiting for the for this report to be put up by the EIA. This is not the updated report. Anyway, so the summary report is 5.7 build, 4.7, 3.1. That's coming into a holiday week. All right, that's crazy. Are you telling me that in the weekend going into July 4th, there wasn't a big thing? Now, of course, a lot of energy traders are going to say, well, okay, fine, they didn't fill up their gas tanks before the weekend, but I bet next week it's going to be huge. It's not. Okay, there weren't that many people on the road. You know why? There's nowhere to go. Not many people, not a lot of people are traveling from one place where they have to wear masks to another place where they have to wear masks. It's just not a thing. People were avoiding crowds. Everybody knew that the virus was spreading really badly in a lot of places, and it was not a very good July 4th. It just wasn't. That means I don't see where this demand of the oil is going to come in. And if you don't have a demand on July 4th weekend, and people aren't taking vacations and hotels are still empty, then what the hell where's the demand going to come from? And that's the point I was making earlier. Look at this. This is a build. Here's March something, right? Middle of March when we stopped, when we shut down. So from the middle of March until April, and you have to imagine May, June, May and June are in here. So until May, okay, the inventory spiked up like crazy, but they spiked up like crazy while we were cutting back production like crazy. This week's production, 6.4, is less than the 10.4 we started the year with. So you're making 4 million barrels a day less, 28 million barrels a week less, 100 million less barrels were produced in this period of time, especially in this period of time, more than, how many weeks? 1, 2, 3, 4. So in these 4 or 5 weeks, at least 100 million less barrels were produced than normally. Guess what? Where the hell, look at this variation. Where would you put 100 million more barrels? They probably can't even store past this. You're probably out of storage in gasoline. We are topping off the storage of gasoline in this country, and we're doing it in the middle of the demand season. This is a disaster. This economy is in so much worse shape than you think it is. And yet some idiots are buying oil right now. That makes no sense. Why would anybody buy oil when you get a reading like that? It doesn't matter what the oil stock is, and the oil stock the oil stock went up. It never goes up on July 4th, never. That's not even a possibility. It was never consideration that something like that could happen. So this is very, very, very bad. Nope, still not. Okay. No, why am I looking at that? Oil, futures. Here we go. Nope, you're not the future. You are the futures. Oh, and I hate these new charts. I'm so pissed off. Watch what happens. They took away my precious charts. See, this used to be like a nice thing I could click on and copy, but you can't now because it's all gritty. And now it's like a work. So if I do copy, all it does is copy the grid line. I can't copy it anymore. It's so annoying. Anyway, but the grid does help me illustrate things probably better. So here we are on the weekly chart, and we go back to July. Now, see what's totally useless about this? Here's a grid. Here's a grid line, right? I get the dollar grid line, but it doesn't tell me exactly what day it is. Nope, can't be bothered. All right, so here we are in July. Here's the first week of July. Look what happens, right? First week of July, and it rockets higher. Go back here, first week of July. Actually, this July was a disappointment, but it was already higher. It had already spiked out and then disappointed. This July spikes up. This July was already high and wasn't as good as they thought it was going to be. This July, whoa, this July was a disaster. What happened here? I mean, who the hell remembers? It was 2015. But anyway, so the point is, it's not a given thing that you're going to go up in July. And meanwhile, this is a very, very disappointing number. Everything's disappointing about this report. Everything. And to sit there and run oil up, forget 10, but to run oil up in the last month. Here's June, beginning of June. So where are we? Beginning of June is here. So we went up from 34 to 40, which is pretty significant. In that time, and notice that with our gap down spot too, 41 is where we gap down below. So I'm actually thinking we're probably going to come down to at least like 35-ish again, because this is bad. We have blown the summer. It's not going to happen. The demand's not going to be there, and people are going to be stuck with stuff. The economy's not coming back. The second quarter GDP is going to be a disaster. Blah blah blah. I don't want to be doing. I hate it though. I sorry I did these things in the webinar. If I start thinking about the economic situation and I start talking about it, it's bad. These webinars are bad. We shouldn't do them. We can't tell the truth. The truth is bad. Nobody wants to hear the truth. We got to talk about good stuff. All right, let's try to talk about something better than that. Oh no, not the virus counts. All right, maybe somebody has a question to get us on a better topic. All right. Oh, here you go. Robin wants to know if she can support smoking. Great. Okay. I'm considering starting a small position in MO for the dividend, but waiting for earnings season reaction. Stock has dropped for a couple of years, more downside likely as they seem to be struggling with their new products. New products being vaping, really, right? Is that what you're talking about, or other stuff, like chewing tobaccos and whatever other nonsense they're doing? The bottom line is they're feeding an addiction, so they're always going to be a decent stock. Whether or not any particular time is the best time for it, we'll see. Hang on, let me get rid of that box. I love Philip Morris. I think they're, or Altria, whatever the hell they call themselves these days. I love them. They're not cheap, really. They're down. All right, but not hugely cheap. But $40 is a great price. The dividend is probably safe. I don't think they're having particularly less sales or anything like that. We'll take a quick look now and see what that says, because it's a good stock for everybody's portfolio, really. Look at that. Maybe we find a top trade. Oh, that's the main topic of this thing today. That's right. I'm going to talk about the top trades. So thank you. This is the kind of thing that could be a top trade because it's still a value. How on earth is there a value stock left? Their market cap at $40, their market cap is $74 billion, but they make nothing. No, they're going to make $7 billion a year. So your P is around 10. They wrote down stuff. They had some stuff that they were doing last year and did some write downs, but you can see that, well, okay, they also shed a division, which is why the profits are down. But they're going to go back to their profitable ways, and they'll be okay, and they're going to be making money. And we have to look at the quarterlies and see if they're on any kind of track at all. But these estimates are updated pretty well, so I would trust that. And what do we have here? So you see what happened? They have a dip in profits, but basically these guys are capable of making this kind of money. So at 20 billion. Even if they're going to have trouble this year, you still think they're going to drop, they're dropping 40% to the bottom line in these years. That's 40% there. So even if it's 20% and it's $4 billion, okay, $4 billion still makes a 70-something billion market cap. $74 billion market cap is not unreasonable at $4 billion of earnings, not even 20 times, right? That's considered a bargain these days. They've got amazing amounts of cash. They are hugely profitable, and they're selling to an addicted public. So I don't think any of that stuff is really going to change. Cigarettes are generally declining, but they've spun off their divisions and they've got different stuff going on. And again, they're going to get into the marijuana business one day. And if not in America, they'll do it all over. They'll do it in other places. But that's the other part of the group. But they will get into the marijuana business at some point and make a fortune doing that. Because that's all it takes is one big business with billions of dollars to, consolidate it and do some stuff. So we shall see. But that's what I think of Philip Morris. I'm not sure what the question was exactly. Oh, just that generally, yeah. And it's a good stock. So if we look at Philip Morris over the long term, things are falling. What's going on? Who said what? And how does Philip Morris make money? That's an interesting thing. So if you look at the profile then, smokable products, 65%, smokeless products, still tobacco, 17%, wine, I didn't even know about that, 2%, and Anheuser-Busch. So they're diversifying into liquor. The cigarette company diversifies into liquor. I think that's very funny. I don't know why they would buy the worst. It's so weird to me. Why would you buy the worst beer company? It doesn't make any sense to me. There has to be good beer companies that get bought. Why would they buy that? in any case, you know, a stock like this, you just say, look, they're going to make $4 billion. So if they drop to 40 billion, that would be insane, right? So if they lost about let's say they lost 40% of their market cap, that would be insane. 40% of 40 is 16, right? So that would take them down to $24. So 24 isn't going to happen. That would be a price at which you would happily double down. So I don't need to sell the 25 puts. I could just sell the 30 puts and say, you know what, that's pretty freaking low. And these 32.50 puts sell for $4. That's reasonable because that puts you in at 28.50. All right, 28.50 would be crazy low for these guys because there's no way they're not going to make $4 billion. Don't forget, they're going to make $7 billion. I'm saying, how are they not going to make $4 billion? That would make no sense. And even if they make $4 billion, then still you're only giving them a 10 times multiple and they're going to be at 22. So I don't mind holding a stock at net 28.50 that goes down to 22 and playing it from there. That's not an issue. So to me, that's a free thing. They're going to just hand you money. So if you want a top trade on that, that's what it would be. I would sell those puts for $4. And then what am I going to buy? Well, I don't particularly think they're going to do great, but I think they should hold 40. So instead of being ambitious about it, why don't we see how low we can go? So it's at 40 now. If I sell, well, this is interesting because if I sell the 37.50 puts, it's like $7, $6.85. If I sell the calls. If I sell the $40 calls, those are $5.50. So would I rather have $5.50 or go $2.50 lower for another $1.35? I think I'm going to sell these for $5.50. So I sell those for $5.50. That's the most premium I can sell. Because it's all premium. It's 100% premium. If I sell the 37.50 puts for $7, how much premium is that? Well, those are $2 in the money. So if they're $2 in the money, I'm only selling $5 worth of premium. So I'm selling more premium by selling the $40 calls. And what's the only sure thing in the stock market? The only sure thing in the stock market is you will collect the premium. It will expire worthless. All premium expires worthless. That's what it does. That doesn't mean that the strike won't be in the money, but it does mean that there is no way you will ever give these people back this $5.50. You will have to honor the strike, but you're never giving them back the premium. That is going to expire worthless. That is a sure 100% thing that always happens. So this premium will expire worthless, and this premium will expire worthless. So here we are. We started our trade-off by selling these for $4 and selling these for $5.50. So we collect $9.50 in premium, selling those short calls and those short puts. Now, you want it for the dividend. If you want it for the dividend, then you buy the stock. And what are you doing? You're going to take $9.50 off the price of the stock, right? Because you're selling the calls at 40 and you're selling the puts. So what effectively you're doing is you're buying the stock for 30, net 30, and your worst case scenario is you're going to be assigned another set of the stock for $35. So your net average price is going to be roughly, not exact, but $32.50. So right now, by doing that, by buying Philip Morris's stock for 39 bucks and whatever, selling the $40 calls and selling the $30 puts, you're netting into the stock for $30. Your worst case scenario is only twice as much of the stock at $32.50. So your worst case is $32.50, which is $7 below the current price. So 20% off is your worst case. You're going to collect, obviously, you own the stock, you get the full dividend, and you'll be able to roll the calls along and roll the puts along, and you're never going to have to actually deal with it. Your worst case, the stock crashes down and you end up owning a lot of it for $32.50. And if you get called away to the upside, if it goes up really high and you end up getting called away to the upside, you're going to make your dividends, plus you're going to make 33% when you sell your stock for 40. That's a trade. That's a very good trade. It's a top trade. I mean, that's a trade you probably can't lose. And that's what it is when I make a top trade alert. It's a trade that's so likely to succeed that I want to feature it. And then I decide to make something a top trade. So that's actually great. Thank you, because we're looking for ones. We're having trouble finding good top trade candidates, and that definitely would be one. As she says, USO puts are a good way to play oil falling over the next couple of months. Sure. I mean, you could do that because it's I would be aggressive because the problem is you know, that oil could do also. You never know what it's going to do. They could cut back. I don't think they're going to cut back, but they could do more cutbacks. They could do USO. They could do more cutbacks, so they can come up with some other crazy things. But the bottom line is, it's very unlikely. I think the summer is not going to be kind to oil. You can do August, which is a little aggressive, or you can do October. And if it's October and we're at 29.25, which put is worth selling? Well, the 29 puts are expensive. I don't like paying that kind of premium. They're $235. The 33 puts are $470, but they are but since it's 29, then almost $4 of that money is not premium. So you're only paying 70 cents premium here. If you take the $30 puts for $285, you're paying $2 and something premium. So as a consumer, what should you do? Should you pay? Don't forget that the only sure thing that you know for a fact is going to happen in the market is your premium will go worthless. So you're buying an option contract. Cheaper is not better. You're buying an option contract and your premises oil will go lower. But on the other hand, what does it do? When you spend less money, you limit your loss. So the question is, how much lower will USO go? So now let's take a look at USO and think to ourselves, how low did it go? How low will it go? Where's the supports? You know, and again, I bet you all the time, I say I'm a fundamental trader and these charts are bullshit, and they are bullshit, but they do show you what other people are doing. This is what other people value something at. That's what a chart tells you. It doesn't tell you anything else. It doesn't tell you what something is worth. It tells you what crowd sentiment looks like. And crowd sentiment on USO, how is that? Oh, because they did their stupid split thing. Yeah, don't forget, this is after they did a huge split. It's terrible. This is so much lower than you think it is. So crowd sentiment on USO was for, it's so weird. Anyway, because it wasn't anywhere near this, right? So the sentiment in a healthy economy was about 85 to 100, okay, in that range. So let's say 95-ish is the sentiment. With COVID, the sentiment is dropping. It hasn't finished dropping yet. It's going to end up down around here, about 50. So at best, it can recover to 50, 40, something like that on USO. How low can it go? What if this recovery is failing and it looks like we're in for a second round of lockdowns and such and such? Well, then we're looking at something in this range. This was probably an overreaction, but 20 seems to be about right. We're at 29, so you're going to see it go down to 25. So question then is, so if we're right, and if it's going to be a W effectively, so you're going to have this, and then you're going to have that, and then finally it'll go back up. But it's, and by the way, if you look at it monthly, this is June, July, August, September, October, November, December, January, February, March, we have a cure, June, July, and then it's next summer, it starts going back up. So that kind of W, very, very bad pattern. Very long-winded recovery. But let's say we kind of come down around here and then it fixes up or whatever. Either way, though, the target is going to be, and certainly it's going to happen by August, too soon. It's not going to go far in August. The most it's going to do is go this. So you have to give it a few months. And we have to figure that the summer is going to be a bust and that USO is going to start collapsing. And that's going to bring us to, so our target is about $25 in about 3 or 4 months. So now we go over here and we say, well, what's going to be reasonable then? So October's fine. That time frame wise, it's good. It's 100 days, 3 months. But then what's our target? Our target is 25. Therefore, makes no sense to sell the, it makes no sense to buy the puts at 25. I'm sorry, it would make no sense to buy the puts at 30. You're risking a lot. It could go the wrong way. But if you do the 25 puts, because at the 30s, if the oil drops $5, you're going to get paid about what the $5 highest strike is. So the 35s are 6. So you can make $4 if you buy the $30 puts and it drops because they're in the money. That's why. But on the other hand, if you take the 25s or the 26s for $1.35, right? And then you go 5 up from there, 1, 2, 3, 4, 5 to the 31s. That's $3.40. So those are going to give you a very, very significant move, especially on a percentage basis. It's more than double. Meanwhile, you're risking a lot less because if it goes 5 the other way, 1, 2, 3, 4, 5, you're at 64. So you're risking a 50% loss against a more than 100% gain, almost a 200% gain. Therefore, your best risk reward is actually in those 20, whatever the hell they were, in those 26 puts. So it's just a feeler. You're putting it out there, and hopefully you're going to make some money. If you put $12,000 on it or $13,000 on it, you can make like $3,000 or $4,000 pretty easily, which is a wonderful percentage. But on the other hand, you're only risking at most maybe half of the 13,000, so you're risking 7,000. So there's a good potential to make a few $1,000s without getting burned too badly. And on the other hand, if all goes perfectly for you and oil really collapses, you could easily get a $5 drop in oil that's going to bring up $3.40 off your $1.30 entry. So it's almost a triple. And that's how you have to think of things, like how sure is it? How long is it going to take? What's your expectation? What pays the best inside of that expectation, so on and so forth. So goes back to the main topic of the day, though. Hopefully there's not another question. Nope, there's not. Okay, so now we go back to the main topic of the thing that I wanted to talk about today, which is what I talked about this morning. Why are there no top trade alerts? And there are no top trade alerts exactly for that reason. I don't know which way oil is going to go. I feel it's overpriced. Okay, I feel it's overpriced, and therefore I'm willing to make a quick bet like this and short it at 40, and we make $120 already, and hopefully it's going to break down and we're going to make more. But I'm willing to make a quick little bet like that. But I'm not actually advocating the USO short position because who knows? The Philip Morris trade, fantastic. This one, because fundamentally, Philip Morris is not that bad. Why are you selling it so cheaply if it's not that bad? You know why? It's boring. It's not a momentum stock. Nobody's piling into it. But USO probably going to go lower, but it's manipulated. You know that Trump is buying for the SPR. You know that the Saudis are cutting production. You know that the consumer numbers are bullshit and people have these idiotic reactions to reports that make no sense. So how much money do you really want to risk on that? There you go, July 3rd. Hey, all right. So gasoline production, blah, blah, blah. Refineries operating 77% capacity. That's low. 25% of the capacity is offline. So again, don't forget, the economy is down 35%. 25% of the capacity of the refineries is offline. That right there tells you you've got a disaster with GDP. Hang on a second. I'm gonna do this. Gotta tell this guy what's going on because he wants to try to get a hold of me. All right, custom. Two. Okay. Where was I? Oh yeah. All right. So bottom line is that, well, like we were saying before, commercial crude inventories increased 5.7. Gasoline decreased 4.8. So what? They made more gasoline. They sold more gasoline, but the oil piled up in the back because they weren't refining it. It's not enough throughput. That's the only reason. If they had refineries operating at normal capacity, that would have gone. How much is 25% of capacity? Well, capacity of gasoline is 8.4 million a day. That's the refinery capacity. That's down 25%. You can see it's down 1.6 million per day from last year. So last year, 9.6, this year 8.4. That means 1.2 million per day, or how much? 8.4 million barrels per week less gasoline is being produced. And this week, with 8.4 million barrels less being produced on the same time period last week, we only had a 4.8 million barrel, wait. Gasoline. Increase, decrease. We only had a 4.8 million barrel draw. Okay, so I forgot the number already, 5.6, 8.4. So 8.4 million barrels less were produced, which only led to a 4.8 million barrel drop. So another 3 point whatever the hell it is barrels were increased. There was more, 3.8 million barrels more than you would expect were not used, were not needed, completely not needed. Even though we cut capacity back 25%, they still had too much. This is a disaster. This is economically a disaster. And we're all pretending everything's okay and it's not. Damn it, I'm doing it gloomy again. I gotta put a post-it up on my monitor that says, be positive. Tell people nice things. Everybody gets bummed out. I'm sorry. It's got to have a reality check somewhere. There's no reality check. I watch the freaking TV. I watch the news. Everybody's in fantasy land. I don't know. I did this in 2007 too. I didn't do it in 1999. I just shut my mouth because people were making millions and millions of dollars, and I was like, la-di-da. I'm like, oh, how nice for you. You bought a Lamborghini. How are you gonna make the payments when the market crashes? That was all fine. But but in 2007, I said stuff, but then it was too soon. I was way too soon before the crash. This is worse. This is so much worse. It's right in front of you. You can see it every day. If you're in America, you can see it. It's all around you. You're not allowed to leave your freaking country. You're not allowed to leave your disease-ridden country. Nobody will take us anymore. Doesn't that say something? Doesn't that make you pause before you buy Chipotle for freaking $1,000-something or whatever insane price it is, or Tesla for God knows what it is now? And is there no reality check at all? I don't know. I try. I want to have a positive outlook, but my daughter, her roommate's parents lost both of their jobs. They've got nothing, and my daughter, God bless her, is paying for everything for her roommate for the summer. And then they have two friends, and they don't have any money, and they lost their housing. My daughter took them in too, so now she's got 4 people in her apartment. She's still, they all do stuff and make some money, but they all chip in for food and everything. But it's crazy. And God bless her, she's got a great heart and she wants to take care of people, and I support that 100%. But that's just like a little microcosm situation of what's going on in the real world, though. Everybody's hurting. And this is terrible. All these people don't have jobs, and it's getting worse and worse for them every day, and they've got no money at all. And my daughter's roommate doesn't even know she's gonna be able to go to school. And that's the thing. I'd like to help, but that's like freaking $30,000. It's like a lot of money to fork up her tuition. And then then it just goes crazy. You want to help people, but on the other hand, it's like, Jesus, how do you help all these people? And it's just everywhere. It's everywhere. I talk to so many people about this stuff, and it's just really bad out there. And we are all like, la-di-da, let's make money in the markets. And it's a problem. It really is, guys. I'm sorry. It's on a grander scale. It's not just us, obviously, but it's everybody just trying to go on with their lives and pretend that there's not a problem, that there's a gigantic problem. I said today, I was saying that today at the end of the post, I said, look, this is nuts, guys, because here we are. This is us, the great big red spot, redder than China used to be. The great big red spot, 3 million infections. China topped out. Where's China? They're not on this list. They topped out at 80,000 and they stopped it. 3 million, a lot more than 80,000. 80,000, 800,000, that's bigger than 80,000. That's nowhere near 3 million. You got to go 4 more times after that to get to 3 million. So it's 10 times what China had, and then 4 times that. About 40 times as many infections as China. That's where we are. And we're calling it the China virus. And by the way, it turns out it started in Spain. They now say they're not saying it started like in Spain. It didn't start in China. It just went to China and spread there. They're doing genetic studies and things like that to find out what actually happened instead of just pointing fingers at people. You know, look, Africa's better than us. South America. Who is it? The guy, the president of Brazil has it now. He got COVID because he didn't, you know, he's another Trump. Trump will get it soon. He's surrounded by idiots who don't protect themselves. But this is bad. It's not bad just because we look like a zombie apocalypse. You know, like the movies when there was a zombie movie and you watch how bad things are getting, you see this and you go, uh-oh, they're doomed. Why do you think that's not true? How do you look at this and not understand that this is the doomsday scenario of these movies? You know, and yeah, we're not dying, we're not turning into zombies, but we are certainly losing hundreds of thousands of people. People are dying like crazy. And what was my point I was making this morning? I said, look, in the September 11th, we lost 4,000 people in the attack on the World Trade Center. 4,000 people there and whatever around the thing, about 4,000 people. What did we do? Within a week or two, there were security guards at every single building, right? There were TSA was set up with a $1 trillion operation to set up the Transportation Safety Administration. Every airport was secured. Everything was secured. Terrorist checks were going on everywhere. We have the Department of Homeland Security was set up to check all this stuff. Where is the Department of Virus Security? Where is the TSA for viruses? Where is the Safety Administration that makes sure that nobody gets a virus? God damn it, something's going on. I got another call from another guy who wants to talk to me. Something big's going on. Oh, no. What the hell? Conference until 3. All right, so apparently I'm going to be needed before this. Where was I? So, great. You know, where is this stuff? I'll do this without criticizing President Trump and just saying, what the frick is our government doing? Where is the Department of Virus Security? Where is the budget for protecting human Americans from viruses? Where's the government handing out the masks? Where are they doing coordinated testing? Where is any coordination at all of any kind? Why are we not taking this seriously? Not when 4,000 people die in a single attack, but when, I don't even know the number anymore. Whatever the frick the number is of US virus deaths. Oh, let's find out. Let's find out. Let's go to the tote board. Here's the United States. Oh, here we are. What day was this? Oh, this is fun. When was this? This was 3 weeks ago, I guess. It'll say somewhere. Oh, here you go. June 3rd. Oh, how convenient. 1 month ago. 1.9 million confirmed cases, 112,000 US deaths. So here we go again. We're going to refresh the United States. Dun, 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 dun. 3 million, another million since last month. 130,000 US deaths, not 4,000. Oh, I forgot what the number was last month. Damn it. Whatever it was, who cares? I mean, look. Oh, here you go. We can find out. How many? Nope, that's how many infected. It's not how many dead. Oh, well, whatever. How many people are going to die before we do something? What are we doing? How are we putting up with this? What if September 11th happened and George Bush said, "Oh well," and then the next day some plane hit another tower, and they go, "Oh well, I guess they're going to hit all our buildings. Nothing we can do about it. Too bad." You know, hey, everybody stand outside and yell "stop" when a plane comes by. That's basically our protection policy. Okay, if you see a plane heading to a tower, try to distract it with some flags. That's where we are right now. We have no policy. We have no clue. That's like saying on 9/11, well, you know what? Every state governor should do their own thing. You know, if you want to protect your airport, protect your airport. Don't protect your airport. You know, we have a freedom. We shouldn't go through metal detectors. It's asinine. You're not going to stop anything that way. Yet somehow this is okay. Somehow we're not outraged. And I don't mind not flying. I do mind not flying, but I don't mind not flying compared to not being able to leave my freaking house. That pisses me off. Anyway, so I'm upset. I am upset. I'm sorry. This is ridiculous. So that says, now why does that say June 3rd? That's weird, isn't it? I did refresh it. Isn't that weird? What happened there? I refreshed it and it didn't change June 3rd, but it changed that. Anyway, globally, so there were last week, not last month, last week, there were 9, whatever the hell virus is. Move the tab, duplicate. Can I duplicate it? Here we go, brand new, fresh one. So we were at 9.3 million cases last week with 478,000 deaths last week. Now we are at, oh my God, really? Holy shit. Really? 9.2, 11.8. I'm making myself depressed. It's really 2 weeks. All right, it's 2 weeks. So no big deal. 2 weeks. 9.2, 624, 11.9 is much bigger than 9.2. 2 weeks later. How many dead? 478, 545, 70,000 more people dead in 2 weeks. And here's the thing, global deaths, global recovered. Only 6.4 million people have recovered from the virus. Close to 10% of them are dead. 6.4 million recovered, 545,000 dead. That's not 1%. That's not a cold. That's a lot. And you know what? It's not developed countries. Here's the US. In fact, it says right there, 1 million recovered. Remember how many we have? Remember how many people we have sick right now? 2 million. Only 1 million have recovered. 66,000. Wait, no, I'm sorry. 131,000. That's 10% right there. 10%, 13%, frankly, of your recoveries are deaths. This is not a cold. This is not nothing. We should do something about this. So what's the fact? The fact is we're not doing something about this, are we? We are doing nothing. We are doing as close to nothing as you can do. Probably we're doing worse than nothing, because if we did nothing, if you didn't falsely tell people that the virus wasn't a big deal, if you didn't have propaganda campaigns basically saying that people who wear masks are liberal scum, if you didn't make it like you're too tough to wear a mask as a leader, I'm not saying anything about Trump, could be any leader. So you know, nothing bad about Trump. I don't want to piss anybody off or offend anybody, but if that's how you're going to play it, then you're doing worse than nothing. You are misinforming people. You are leading people down a path to disaster. And you're not just leading your people down a path to disaster, because those people are in turn endangering everybody else. They are creating an unsafe country. And we have a right to be outraged. And I know that's considered liberal outrage, because how dare us infringe on somebody's right to infect everybody? How dare us play the nanny state? How dare us want government to do something. How dare us expect the government to do something about healthcare? That is so liberal. We need to stop that bullshit and start sucking up the virus and deal with it. I mean, it's just crazy, guys. But we're not doing anything about it. And we had, 2 weeks ago, 2.3 million in the US. Now it's 3 million in the US. That's 700,000 in 2 weeks. That's about 30% increase in 2 weeks. 30% more people infected in 2 weeks. How would you like your portfolio to go up that much? That would be great. This is not great. This is bad. So that's why, going back to our main subject, that's why there aren't any top trades. This is crazy. You can't short the market, because I would let you obviously say, well, why shouldn't the top trades be shorts then? Because you can't short the market, because they are putting trillions and trillions of dollars. And today they're talking about more stimulus again. But the thing is, if it cost us, sorry to go back to this depressing crap, but here in March, we started shutting down, and by this time, by April, the government had approved $6.7 trillion in spending, 2.7 direct and 4 trillion from the Fed. The government approved $6.7 trillion in spending, and it lasted all the way until May 23rd, roughly. Lasted a month and a half before they said, oh my God, we have to reopen the economy because this is a disaster, because 7 trillion didn't stop it. That was when we had 500,000 infected people. No, I'm sorry, not 1. Let's say 5.9. Let's say we had 1.5 million infected people. Is that right? What is this number? Oh yeah, I'm sorry. Now we have 12. Now we have 12 million infected people. That's right. So it's 10 times. Now we have 10 times more infected people. All right. So it doesn't really matter that we have more infected people. It's the same shutdown, right? It's not less of a shutdown. It's the same shutdown. You still got to shut the economy down. Still got to keep people out of the jobs. Still got to go back to. We know what it looks like because we just lived through it. We just lived through a shutdown. Have to go back to a shutdown. There's really no other way to stop it. So we either go back to a shutdown, spend another $6.7 trillion, but this time don't freaking let everybody out of the house after 90 days. Not the house at 90 days, after 45 days. Don't say, oops, forget about it. We had a 90-day shutdown plan and we stopped it in 45 days. And it was completely disaster. So now we need another 90-day shutdown, real shutdown. We need to spend another $6 trillion to get over the shutdown and stop everything from collapsing. You don't need 10 times. Just because we have 10 times more cases, we don't need 10 times more shutdown. It's the same shutdown. Don't keep people in their house. Don't let them out until there's no more virus, like China did, like Europe is doing, or is basically done. Is basically done already. Although this doesn't look good, they're way lower than us, obviously. Here's you don't see a European country on here until you get to England. And what did England do? Didn't shut down, just like America, a bunch of morons. So Boris Johnson, moron. His country is the only country in Europe on this list. Then we go down, 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 down. Turkey. Here you go. Turkey, France, Germany. That's where Europe is, down here for the most part. England's up a bit, but still, only 280,000. It's nothing like this. This is insane. We are out of control. And China and Europe is still doing the same thing. If there's an outbreak in a city, they shut that city there right back down. And what's the lesson? The lesson for the cities is you better learn to control everything. You got to control your people. You got to pass your own rules and make sure things are done properly. You have to enforce it on the local level, but on the national level, you have to say, hey, if you can't control your city's going to be cut off. And that's it. We're cutting out your city. So the cities are highly motivated to fix themselves. We're not doing that at all. Our government has rallies in cities and says, hey, you don't have enough infections. Let's have a rally. Let's bring 20,000 people together in a stadium and start shouting when the freaking virus travels through the air. with no mask on. Really smart. Anyway, so what are the choices? So economic choices are spend $6-point-something trillion again to shut down and hopefully do it right this time, or we can do it wrong again and spend another $6.7 trillion. It really doesn't matter now. Really makes no difference. It's completely, we've destroyed the concept of money is gone. It's just bullshit. So that's a problem, but we'll deal with that later. That's this problem is what's still happening. Look how fast it, remember we used to look at that when you were trying to decide whether it was going up or down? Pretty obvious now, right? Look at the speed of that. That's your tax revenue, less and less and less. Here's your payroll tax revenue, less and less and less. Why would it be less? Why would the payroll tax revenue be going down? What does that mean? That means that people are making less and less money. That's why your payroll tax revenue. And who's making that? Well, let's see. I don't pay payroll tax. Or Social Security tax. I don't pay, well, that is Social Security. I don't pay Social Security tax. I maxed out. I don't pay it. It's not me. It's not most of you guys. We maxed out our Social Security. It's regular people working regular jobs, making less and less money every single day. That's what that is. This is the income. Now that includes me and you. It's everybody's income. Down and down and down and down and down. And to the extent that you and I are able to preserve our incomes, that means some poor schlub that means 100 poor schlubs are making this number go. This is crazy. We are spiraling down. Corporation 3, 2, 1, 0, 49. See, I can predict it. This is insane. It's getting worse and worse. It's not getting better until this number changes. Spending's going up 60, 70, 80, 90, right? GDP, oh look, GDP is, how does the GDP go up? I don't even understand how is the GDP going up given this other data? I think this is miscalculated, frankly. So national debt, oh my God. I mean, that's just totally insane. $26 trillion national debt. $3 trillion budget deficit. $6.2 trillion federal spending. Revenues going down and down and down. So that's the economy. So back to all this is implied, and that's the thing. I write these articles. I don't like to go over the same crap over and over again. And I know you say, "Whoa, you just went over the viruses and debt clock." I'm sorry, that's like the thermometer for the country. I don't like to go over the same stuff. When I'm writing an article, I try to write things about like what I'm thinking now, which is not, not necessarily things that are like I've gone over before. So today I talked about I'm like, look, here's why there's no top trades. There's no top trades because I realized that I hadn't done a top trade in a while. I'm like, well, what happened to them? I mean, people have to be wondering, why don't we have any top trade alerts anymore? There's nothing. A top trade alert is something I'm sure of. And what I'm saying here and what I'm saying to you guys and what we're saying about oil and whatever is you can't just bet on things just because you're betting. And it's worse for traders because you sit down at your desk to trade. And I think one of the real benefits of PSW and having chat rooms doesn't have to be ours, but having a good chat room where you can talk to people. And I'm sorry that this stuff gets into political stuff too often, which is a shame because it'd be nice to just all talk about regular things. So I'm going to encourage all you guys right now when you're in the chat room, how about spend more time talking about real stuff, not politics. Let's try to talk about things that we observe in life and things that we see and our perspective on what's going on without trying to be political about it. And, share some information. We got so many smart people. I talked to a lot of you guys. You're so smart. And we do those Vegas conferences, and they're so good because it's so many cool people talking to each other. I really love those things. You know, it's like that's a nice thing, because instead of trading or feeling like you have to trade, you can just talk about trading and talk about companies and talk about investing instead of trying to do it, because not every day is a good day to invest. You know, not every day is a good, you can have a kite. Not every day is a good day to fly a kite. You got to pick the day when it's good to fly a kite. You shouldn't bring the kite out when you look outside and it's calm and no wind and whatever. You say, yeah, not a kite flying day. When it's windy, that's when you pick up your kite and go to the park. Not too windy, the right kind of windy. That's when you fly your kite. Trading is the same thing. You can't trade just because you decided it's time to trade. You can't trade because you're bored and you got nothing to do. Okay? You got to protect your investment, protect your wealth, build your wealth intelligently. And what I see now is I see that, yeah, of course, there's going to be another round of stimulus, but I don't see how it's going to be adequate because of this. All another round of stimulus is going to do is going to stop this from going to zero. That's all they're going to do with another round of stimulus. You're going to put, again, don't forget, it's $4 trillion from the Fed. That's not real money. That's money that doesn't show up here at all. $4 trillion from the Fed goes to rich people, goes to the bankers, supports the banks, supports wealthy people who borrow money really cheaply, and so on and so forth. It doesn't change their income very much. But $2.7 from the government is what this is. That's what's buying this. 2.7 trillion in stimulus is allowing you not to have a zero here and a zero here. And that would make that one bigger. So basically they're saying, well, you know what? We only spend $2.7 trillion and we have a deficit, but if we didn't do that, we'd have zero here anyway. So what's the difference? That's their math. Doesn't matter. One way or another, we're either not going to get the revenue or we're going to get the debt. It's either way, it's going to be debt. In the end, it's going to add to the debt. And of course, if you let the revenue and the payroll tax go to zero, then you've crashed the economy completely, you're in a depression, and your chance of recovering is very slim, and you still have the debt. Therefore, better to put another $3 trillion on the fire, keep your people warm so they survive the winter, and hopefully next year we can start paying off the debt. Not that we ever do, but in theory, in some vague economic theory, that is sort of what's supposed to happen. You're supposed to keep your people alive so that they can get back to work and you can pay down your debts. We're never going to pay this debt down. You can't do it. It's not payable. This is, and let's not forget that the interest on this debt is like 1%. And I don't know if that's in here somewhere. There's so many numbers. You know, interest paid. Yay. Okay. So here you go. I don't know what total interest paid means. What does that mean? Unfunded debt interest, state debt, local debt, interest on debt. There you go, 385. There you go. So 26 trillion in debt, 385 million in interest. Billion. It's so very confusing number. So $385 billion in interest on that. And that's at obviously 1.5% roughly. So basically 1.5%. So that's our interest on debt. Now, what if interest goes up to 3%, like a normal period of time? Well, if it goes up to 3%, then that's going to be $700 billion. That will increase. That will mean we need another $700 billion from these two buckets just to stay even. That would be a 20% increase in income taxes and a 20% increase in payroll tax. So a 30% increase in payroll taxes, or just a 700 billion would be roughly 40% increase in payroll taxes, just to get even if rates go to 3%. What happens if rates don't go to 3%? If rates don't go to 3%, then this thing, where's Social Security? This thing will be broken. Because the problem here is that these two programs have no interest. They've got money in bonds. They got money in these treasury bonds that pay 1.5%. We took this money, stole it, and put it in those bonds, and they hold those bonds, and they're making this teeny tiny amount of money, while the government is losing money this fast. while they are making money this fast. That's a disaster. Well, look, our Defense Department is going up nicely too. How good? Isn't that great? That's just this year. That's so far this year, 693. How's that? Wow. So in what way is that going to get better? How is it going to be fixed? But you understand the trade-offs are terrible, because the trade-offs are keep paying 0 interest rate so that this number stays manageable. But if this number stays manageable because you're paying no interest, then these numbers are going to bankrupt the system, because they're not collecting enough money. They're not. The plan was they would get 3 to 4 to 5% interest, and that the money would be used. The interest would be used to pay off the retirees. But now you're chewing up the money. You're taking money out of the account because you're not making enough interest, just like my freaking mother and her friends. That's happening to the people. They're getting crappy returns on their retirement accounts. They have to start digging into their retirement accounts in order to sustain their lives. And then if they do ever start getting interest again, it's less. But at the current rates, and if we sustain the current low rates for a longer period of time, which obviously we're going to do, they're going to just have less and less money every month, and their situation gets worse and worse every month, bit by bit by bit by bit. It's like a freaking water torture. How is that a healthy economy? How are we at all-time highs in the market? How do you justify? How can I tell you a top trade alert in that environment? My top trade alert is don't trade. My top trade alert is do not participate in this. It will crash. I don't know when. And I know I said this in 2007, and we missed the whole party in 2007. It went up and up and up, and then it crashed in 2008, and everybody said, oh, Phil, you were right, a year later. And I got sick of telling people. I really did. I got tired of it, because people don't like to be told that everything's going to blow up and that what they're doing is ridiculous and they should be careful when everybody's making money. It's hard to do stuff like that. But morally, I can't do anything else. I can't pretend things are better than they are. They're not. This is horrifying what I'm seeing in front of me right now. Anyway, all right. So happy time. All right. So meanwhile, when I see a trade, as we did during the entire month of May, why? Because in May, look how prepared I am. In May, we had the stimulus. It was still taking effect, and the market went up and up and up. Now we've run out of stimulus. Now we've exhausted our stimulus, and this is what we're doing. But in the month of May, there was so much money put into the market right here. So much money that we bought ourselves a nice little rally from 26 to 32 is 600 more, 20% rally in the market for $2.7 trillion. That makes sense. That does make sense. You put $2.7 trillion into the economy, and it's a $20 trillion economy. You boosted the economy by 10%. Now, obviously, the economy's faltering, blah, 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 but we haven't recorded that yet. That's only going to come out in a couple of weeks, the GDP report officially. That's something to worry about later. The reality here is that the last GDP report we got wasn't so terrible, so everybody thinks it's going to be fine. Even though these are corporate tax revenue, down and down and down. Doesn't make sense, does it? Even the tariff revenue is going down. We're not even importing things. We're not making corporate profits. It's going lower. We're not paying people. It's going lower. Even though all of that, $2.7 trillion kept us up here. Now we need another $2.7 trillion, but are we going to go up here? No, we probably need $2.7 trillion just not to fall further. So the government is going to announce stimulus. Trump is having trade talks with Canada now. How ridiculous, right? That's what we need to do. Spend 3 days having trade talks with Trudeau. That's really important right now. With people we never had a problem with before with trade. So yes, there will be more stimulus. Most likely it's not going to be an adequate amount. I don't think they're going to put on another 2.7 trillion. I think they'll put on another 1.5 trillion. and pretend it's enough, and then people are going to freak out and the market's going to go down because they'll say it's not enough. Maybe they'll do 5 trillion. Who cares at this point? I would say that. If it was me in charge, I would do 5 trillion. And I would say, look, we're doing 5 trillion, but we're doing it by setting up the Chinese street cleaning task force, whatever the hell you want to call those things. You know, China virus cleaning. Let's see, I'm sure I'll get some pictures like that. Images. This. There you go. Where's that? Where's this? Okay, when you go to a mall, where's one of those? You know, where's the other picture? Oh, these guys. Where are these guys? Look, see, stadium, clean. You want to have an event? Clean. 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 People cleaning everywhere. Cleaning. Now, you want to know those 3M masks go? Look at these people. Mask. Everybody's got masks. They got goggles. They got suits. The suits cost $6. I know all this stuff now. We trade PPE stuff. These suits are $6. The masks are $2 or $3 depending. The goggles are reusable. Those get washed, but those are like $15. The gloves are cheap. The gloves are only like the gloves are like 10 cents. The glove, not those gloves, not these big gloves. These regular gloves are 10 cents. So, you know, they're spending, you know, you're spending $10 a day or so to outfit the people so they're ready to work. That's part of the cost of sending these people out. Are we doing that in America? No, we are not. Are we doing this? No, we are not. Are we doing this? Does anyone do any of these things? Has anyone seen anyone doing this stuff anywhere? What is wrong with us? Look at this. What is wrong with us? We are insane. Oh, he died. That's bad. But see, still masks. There's a bad example. That guy died anyway. Look, robots. I'm not sure what that robot does, but I remember they have robots that do stuff. They have robots that are checking people's temperatures, infrared, making sure you should be out on the streets. What are we doing? Anyway, so where were we? Oh yeah, okay. So there are places successfully fighting the virus. They are also banning us Americans from going there because we are irresponsible jackasses and we are infecting the world. We're dangerous. So we are now isolated in our own country, just like basically the isolationists wanted us to be. So I guess it worked out fine for them. You know, we are cut off from the world. We are banned from the world. Oh my God, what a country. And we're doing nothing to contain the virus inside our own borders, obviously. Very bad. Anyway, so meanwhile, what kind of trades do we make money on? Where am I? Okay, sorry. All right, so one idea I had was IMAX. Oh, where was IMAX? Okay, so IMAX is not doing that great, obviously, right now, but they are opening in China, and China's a major market, and they're going to be fine. They're going to go back to the movies. They're going to start doing things again, and long-term IMAX will be fine. They only have problems. They have short-term options, so we have to roll them, and sort of people don't get that concept because until they roll it, they don't see what's going to happen. But it'll be rolled, and it'll be fine. There's Arconic, which used to be Alcoa. It's one of the parts of Alcoa. They obviously shot up nicely and did well. We bet on them to be over 12. And they're now at 14 or whatever they are. This is our entire future is now portfolio doing very well. We have 3M who make the mask. That's kind of, you know, it's funny because people say, where do you get your trade ideas? Well, you know, I see everybody wearing a mask, and then I say, who makes all these masks? And it turns out to be 3M. And I say, I bet they're going to make a lot of money. There's fundamentals. It's not hard. It's just a matter of, but it was a matter of us waiting until, when did we do the 3M trade? Oh, I can tell from this. So 522. So what happened is 3M was too high and we felt it got away from us and it took a nice little dip. And then we said, well, why did it take a dip? And then we analyzed it. Somewhere around here is where we bought it, about 145. And what was our trade? It was at 145, which notice is a midpoint. And I said, well, it should get back to 160 eventually. And so we took the 2022, not ambitious, 130, 160 call. We sold the July 150 call, so I didn't think it would come back this quickly. In fact, I thought it would be drifting along this line. But that's fine. We sold it for 540, and we're currently 460 in the money, which is showing a loss right now. But we're going to what? We're going to roll it, obviously, to a higher strike at some point. And we only sold 5 out of 15. We only did a 1/3 sale. We're fine. We also sold the 2022 130 puts. Why? Because 130 is a fantastic price to these guys. Look how well that held up. Forget the spike. Look how well that line held up. Clearly, it's too low. And valuation-wise, obviously, clearly, because if you look at 3M, here we go. Okay, so if you look at 3M, oh, I'm sorry, we should have looked up there first. $89 billion company. Very, very steady. 4, 5, 5, 4, 5, 4, 5. $5 billion, basically a $5 billion earner with an $89 billion market cap. So 20 times earnings would be $100 billion. I think they're going to do better than everybody thinks because of this mask stuff. They are running full capacity all around the world, making masks all the time. And I think they are going to make quite a lot more money than people expect for this quarter. And for the year, and for as long as it takes until this virus goes away. So I like them. I think they're undervalued, and in no way, shape, or form do I think this company is going to go below $75 billion, which would be a 15 PE. 75 billion is only 14 below here, so 20% is like the most I really think it's going to dip. So I then go back to the chart for 3M. Nope. Oh, I know, it was right on that page, wasn't it? That's why. But I do. Okay. So then we go back to the chart on 3M. I said it's not going to go down more than 20%. 20% would be 130, and bingo. Look, see, that was my valuation. You see how I did that? That's my valuation, and I came up with 130. Of course, I forgot it was 130 because I have no memory. But it turns out that's the line. There you go. That's it. That is why 130 is bouncy, because I'm not a super genius or anything like that. I know how to analyze something. So when I analyze something, I know what the price should be. The price should be 130. I'm not the only guy who thinks so. Everybody seems to think the price should be 130. That doesn't stop idiots from panicking and selling it below 130, but it does tell you that over time you're going to stabilize at 130 on the lows. Because 130 is an indisputable value price, and all the value investors stop in, and that's what makes the bottom in the market. You know why? Because the value investors are the guys with the money. Okay? The idiots don't have money. These idiots don't have money. These idiots, me, we have money, and we deploy it when something hits a value price. That's how a floor gets made. Real people with real money start actually investing in things. Everything else is just nonsense. It's just people trading and sentiment trades and things like that. That's why I like being a fundamental investor. I buy it and I don't worry about it. I buy it for what it's worth and then I don't worry about it, just like Warren Buffett. That's what he tells you to do. Read every single book he writes, and that's what he tells you to do. Buy it, don't worry about it. Buy something that's worth what you're paying and don't worry about it. As long as the underlying fundamentals don't change, as long as the management is a good management team and handles their crap during a bad time or good time or whatever, as long as they're intelligently spending their money and growing their company in a good way. And that's the other thing he tells you to do. I don't invest in companies, I invest in strong management teams. Because a strong management team is worth more than anything else. And in fact, frankly, when I'm investing in small companies, when I'm looking for things for PSW investments, I'm very, very up on this. Is the management team good? Because like I invested in new age marijuana company, and they are branching out, moving forward, and opening up new offices. And even with the virus, they're figuring out ways to make money. Even with all this stuff going on, they're figuring out how they can make money and how they can get stuff done. In Hemp Boca is a CBD company. They were doing one thing, then doing another thing. Now they're trying something else. Now they just have a partnership with the kickboxing or whatever you call Ultimate Fighting. They have a contract with Ultimate Fighting now, and they're going to be supplying CBD products to Ultimate Fighting, so that should make some money. Pivot. You got to pivot. You got to be on top of things. Engaging Choice used to be, when we invested in it, used to be called, the hell was it called? Fun. It was called Fun Entertainment. We invested in that. It was, the fun thing wasn't catching on. They've changed it, made it Engaging Choice, went to the direct to the video distributors market. That's working out much better now. They're starting to get offers. You know, the point is you invest in management teams that know how to run something. And if the business model changes, if the situation changes, if things go wrong, you have to adapt and move forward with your business model. And if you don't care about that, people, you don't invest in something, MMM, yeah, oh, they're good. What do? I don't know. They do stuff. Like we were just talking about a space one today. What was that? That was, how come that got separated like that? We talked about Control F, SP. Really? What was it? I know it was SP, but I don't remember what the symbol was. Well, that's not working. SPCE. So Jetta was talking about SPCE. SPCE is a blank check company. What does that mean? It's a company that, oh, here you go. Let's see if we can find it. In Yahoo. What's a blank check company? SPCE. So this is Virgin Galactic. They don't actually have anything. They don't really do anything. They're just a concept company that intends to invest in stuff. For some reason, they have a $3.8 billion market cap. But what's the reality? They have no revenues. They have no assets. They have a balance sheet with $600 million on it or something, or well, those are their assets. What the hell is this? This thing's terrible. Is that just because they have nothing going on? It's weird. But they're burning through cash. They've got some theoretical assets. We don't know what it is. There's not any details here. But there's not really any revenues to speak of. These are just numbers in thousands. It's $2 million in revenues. Okay? Their gross profit is this, but look at the operating expense. They made $1 million in profit on $2 million in sales, probably advertising, knowing these guys. But then they spent $200 million on operations. That's interesting, isn't it? How much money do they have? Actually, we don't know. I guess their assets are probably cash. Assets, current assets, non-current assets, cash, basically. Their asset is cash. They got $600 million, and this year they spent $230 million. So last year they spent $230 million. This year, let's see quarterly, how we do it. Oh yeah, first quarter, they spent $60 million. With $238,000 in sales. They spent $60 million on operations. So it's a bullshit company. It's a company that exists to give you the idea they're worth investing in. They've got a $3 billion valuation. They've done nothing. This is the same as the .com stuff. So what, are we going to invest in that? We're going to put money into this thing? It's not an investment. It's a con. It's a scam. Now, maybe they in turn will invest in something that works out, but there's nothing there. They've got a notional idea of buying shuttlecrafts and doing this and that and putting people in space, but they haven't done it. They're not ready to do it. They tested something and it was a disaster. I think they killed somebody at some point, you know, in a test. I don't know. It's out of control. Really is. So The market is very much 1999-ish right now. So what am I going to do? Am I going to tell you to invest in this? Invest in space, it's hot. Invest in this, it's hot. That's not how it works. I want to find something that's actually worth money. Like we found Beyond when it was cheap, it's just not cheap now. Earnings time in July, we will find bargains because you're going to see some horrific earnings. You're going to see some earnings that are going to horrify people. You know, if you go to the GDP Now thing, GDP Now, Atlanta Fed. So we are at minus 35%. GDP is down 35% in Q2. This is a forecast of God knows how many. This is a forecast of leading economists, whatever. This is the Atlanta Fed's direct thing, and they've got pretty good information. And everybody's saying 35% down right now. So what are the earnings? How do you have a 35% down GDP? What do you think earnings are going to look like for these companies? And what are they going to forecast when the forecast has to take into account that we're probably going to have to lock down again? How are they going to forecast a better Q3 when we're doing the same thing? It is now 1 month into Q2, just like we were into April when we started locking down. It's the same thing. We're back into the same thing. First month of the quarter, we're going to lock down but we're not going to lock down for 30 days this time or for 45 days. We're going to lock down for a long, long time. And we already know how bad the impact of this is. And we're going to do it again because we didn't do it right the first time. And that's going to take us to August, September, October, and then it's time for elections. That's where we're going to be. And you know what's going to happen though? If we aren't out of this virus thing by November, if things aren't significantly better, which I don't see why they would be, then, well, it won't matter because it's not like the Democrats can win, but they aren't going to be in power. You know, but when they come into power, they're going to lock everything down again. If we still have virus all over the place, and if this thing isn't cleared up by November, then basically, obviously, November's shot. Then it's December. Then you can't stop these families from getting together for Christmas and spreading the virus even more. And then Joe Biden gets sworn in on January 1st or January 20th or whatever day he gets sworn in. And finally, somebody's going to do something. But the first thing they're going to do is declare all sorts of emergency measures and shut down the country. So when is this going to get better? What are we investing in? We got to be smart. So what we're investing in right now is stimulus. We're investing in more stimulus, and we got to start like thinking about pulling the trigger and just getting out of a lot of these trades. And I keep saying that every week, but I'm still waiting for the stimulus because even if it's inadequate, it's still going to give us some kind of boost, and that would be a good time to sell. Talked about 3M. Oh, that's where we left it off. Okay, sorry. Then there were these. We had Micron did well, FL did well, Berkshire did well. You know, and these were smart picks back then. But then came the end of May, and all of a sudden they start lifting the lockdowns. And you know me, I was going off like this is the worst idea in history. And guess what? It was the worst idea in history. So that's my worldview. I'm sorry, it's not great, but that's where we are right now. So that's why we're cautious. That's why we don't have any top trades. But that doesn't mean we won't have any top trades because earnings season is going to give us some incredible bargains. And that's when I step in and say, hey, you know what? Okay, Bank of America lost $3 billion last quarter, and they're probably going to lose $3 billion again next quarter. But in the grand scheme of things, I don't care. Because eventually, they're still Bank of America. They're not losing money because you took your money out of the bank. They're not losing money because they suck. They're not losing money because they don't know what they're doing. They're losing money because the economic conditions are such that they were unable to make money this quarter. They still have the branches. They still have the expenses. I went to TD Bank the other day, and they still got people in there. I can't see them. You can't go through the door. I have to talk to them behind glass, which is crazy. But I can talk to a bank person behind the glass at TD. I stand there in the big piece of glass in between. If they prefer you go to the drive-in, they don't even want to get that close to you. But I got some real business to do, so I had to go up to the lady, and we were passing documents back and forth through the glass. That's where that is. So they still have the expense of all those people, but not many people are conducting business. I was the only, I had to make a special appointment to conduct real business at the bank. So, it's all weird. And then we have Simon Property Group. Oh, craziness. I picked a REIT, a mall REIT of all things. But it was priced too cheaply. Yes, they're going to have problems. Yes, they're going to have a lot of losses, but not that much. Not so much that I didn't want to buy Simon Property when it was dipping down here. Then it came way back we were reopening, so it went flying up. But now it's like, oops, we shouldn't have reopened. Now it's flying back down. It's going to go, eventually, it will be the right time to reopen. It'll be up here again. So right now, still a fantastic buy at 66 bucks. Still fantastic. Also, could be a top trade right now because it's such a good pick. Eventually, it's going to be good. Right now, not so much. I don't care. I'm not buying right now. I'm not a day trader. I'm not in this for the short run. I'm buying a fundamentally sound company that is capable of riding out the crisis, that will come back as soon as the crisis is over, which probably won't be until next year. But in the meantime, that's what I look for in a bargain. I look for somebody that's ridiculously underpriced. And we haven't had much of that in June because of this false hope. And that's why I didn't buy. I'm not buying, not buying, and not buying, not buying, not buying, not buying, not buying. Now I might buy. Now I see that we bottom out at 60. We bottom out at 60 last time. You come back around 60, get down to 50. I'm going to suddenly go, hey, we could buy Simon Property again. That's when it's cheap, but you got to wait and you got to be patient. Nothing is going to get away from you. There's plenty and plenty and plenty of things to buy, but wait until you see the earnings. Wait until you see the impact. Wait until you hear the CEO tell you what's actually going on. Don't just jump in because you feel like trading or because it's driving you crazy not to deploy your money. Let's deploy it for things that are worth deploying it for. So what else we got here? A lot of questions all of a sudden. What's going on? Hydrogen fuel looks like a great opportunity, says John. Entire fleets are being created, fueling stations, expansions in progress, both home and around the world. How do we play this right now? Yeah, we have that. It's in our Future is Now portfolio. It was in today's post. I know it was somewhere. So in our Future is Now portfolio, we were trying, in fact, I wrote all these down as potentials for our Future is Now candidates ages ago. Whenever we did that, we did it. Here's the Future is Now portfolio, and we have plug right there. See, we shorted we sold the plug puts, and we didn't do Valley. We were going to do one of the others, but we didn't do them because the prices got away. When they come down in price, I'm all over that. I agree with you. It's a good future thing. But the one we went with was plug. We sold 50, which is aggressive. We sold 50 puts, $4.10. They're already down to 43, and this thing is a mile. We sold 250 puts. We sold 250 puts for $1.10 on, when was that? 3/12. So why did we do that? That was what, plug? Was that plug? What was that? Lost track already. Yeah, it was plug. Okay. So what was the date? March 12th. And what happened? So here we are on March. Oh, here's what happened. Okay. Again, I knew I liked them. We were talking about the Future is Now portfolio started in December. I wrote plug. I wrote all of these companies. In fact, all your companies are exactly the companies I wrote for that sector. And I said, let's see what happens. So we waited and waited and waited, the things went up and got away from us, and I was upset we didn't buy one of them. Then I waited and waited, and then it came down here on March 12th, and I said, oh, we're going to buy plug. That's my favorite. And we bought it when it was dipping. We got a fantastic price. We netted in for $1 something, and then we just waited, and it went back to its regular price. Could we have played more aggressively? Sure, of course, obviously. Should we have? I guess we should have played more aggressively, but the thing was crashing. So I took a cautious thing. Then the virus came, and I became cautious about everything. So I didn't take advantage of the incredible value in that net. But I'm sure not going to chase it now at 9. Next time it crashes, I'll buy it again. Why should I buy it when it's up? I'll buy it when it's down. They always come down. Why should I buy it when it's up? It was up in February. I said, why should I buy it? I'll wait. Now I'm waiting. Maybe next time if it comes back to 4, I'm going to go, you know what? 4 is pretty good. I'll do a bull call spread at 4. But I'm not going to rush into this. I'm not going to rush into anything. I'm not going to get forced to buy something at a high price. So JC has a list. Put that in chat. That's crazy. NRZ, your thoughts on NRZ, NLY, ARR, and ARNC in this environment. Generally, the low rate environment is not good for them because they make their money on their interest spreads. And what happens is they lend money out to people and they have an expected cash flow. But what happens is if everybody refinances, they're not refinancing with them, they're refinancing with someone else. So they lose the high interest loan, high interest being 3 or 4%. But they lose the high interest loan they had. The person gives them the cash and says, bye-bye, I'm taking an early exit from your 3% loan. Now they have to go and get a new loan. So they initiate all the costs again of getting a client, getting a loan, and writing it up and doing all the paperwork and blah, blah, blah. And they have to do all that again, but now the loan's 1.5%. And then when rates start going back up, they're screwed because they've got all these 1.5% loans that are never going to roll over, and they've sucked up all their money and tied it up at incredibly low rates. That's what goes wrong with REITs, especially mortgage REITs in this kind of environment. So I'm not gung-ho on them, okay? I do like them, and if they go on sale, I'm happy to buy them and wait until times change, but you have to go with the best management to do that, and the best management is going to be NLY and AGNC are the two, that's ARNC. AGNC and NLY are the two best management teams, and that also goes for CIM because CIM is the same management team as NLY. You go with the guys who know how to ride out an incredibly bad market, and these guys do. So NLY, like that. I mean, those are my go-to guys. Those guys, and they are the same people who have CIM. So CIM right now is a very good price. And then you got AGNC, and they're also flat. So the best price, right? The best one right now is CIM, but they're not going to have anything exciting happen in the near future. It's just a long-term holdish kind of thing. SK said, I started the Tesla trade, buying the January 800 puts and selling the June puts and calls, rolled to July, then rolled to January. Finally gave up when it went beyond 1300 with a huge loss. That, yeah. If you give up, it's not good because you're basically giving up at the top. But of course, obviously, it's a thing. If you know you're going to give up, you have to give up early. The only time you should be riding this out, as soon as you lose 20%, you got to give up. If you can't ride it out, don't go. Don't let it go because it doesn't make any sense because you'll only get stopped out at the worst possible time. Didn't want to take more risk for people predicting 2000. That's what happens in a bubble, though. People go into a frenzy and they start predicting these totally insane things that are just never going to happen. Yeah, we wrote to 1420, and that's the point, though. You have to keep doing it. And I said we had a short and a short, and then we rolled it, but now we got to the point where we had to do something besides just roll it because it went up like this. So I said, well, okay, we had, I forget what it was, maybe 5 short calls that were in the 1200 range, and those were they were costing us $136,000 in margin, and we rolled to 8 short calls at about 1400 that is still costing us the same $136,000 in margin. Now the short-term portfolio, of course, has $400,000 in cash, so it's really not a big deal for the short-term portfolio. And now we have to ride it out. Now, in an emergency, if it keeps going up, I could sell the 1400 puts for a couple of $100, put that couple of $100 into the roll. But the thing is, I strongly believe that this is completely nonsense and is going to go down. So I'm trying as hard as I can to avoid selling puts because I think selling any puts on Tesla, even if you sell the freaking 600 puts, I think you can get burned. I mean, this is the most emperor has no clothes stock I've ever seen in my entire life. I mean, it's just completely nonsense that you give this company a $300 billion market cap or whatever the hell it is. It's ridiculous. You may as well give a $300 billion market cap to the grocer down the street. He's got as much chance of making $1 billion as Elon Musk does. This is nonsense. It's a freaking car company. At best, it's a car company. Even if you think it's going to be the greatest car company in the world, even if you think they're going to have margins like Apple, it's still a car company. And you can sell 500,000 cars easily. Tucker proved that. DeLorean proved that. Lots of people have proven you can sell 500,000 cars. Selling 10 million cars is a whole different ballgame. And it's not going to be that easy, and he is going to have competition. He's right now selling a novelty item for a lot of money with no competition. And he's getting paid as if he's already beaten Toyota. It's ridiculous. I mean, I don't know what he does. I don't know how he does it. He's such a great showman. He's really good at like the playing the game. But that's what it is. He's playing a game. He's not running a company. He's just playing a big giant market game. And his company is just an excuse to look like he's doing something else. But this is really ridiculous. I mean, this is beyond any rational thought at this price. So, and I got to leave it at that because I got to go now. But again, I'm sorry you ended up stopping out because frankly, I don't see this. I think this is a great. If the puts weren't so expensive, I would short the crap out of Tesla. But it's just too expensive. There's no good end to it, and also it's very risky. It is very risky. But you don't know how stupid people can be. People can be unbelievably stupid. Amazon is insane now too. When you, and believe me, I'm going to revisit this, but when you look at it here, before the virus, Amazon was $1,800. Now it's basically doubled. And I'm telling you, when you look at their profits for the second quarter, when everybody was getting Amazon day in and day out, when they were delivering viral supplies, masks, all sorts of things people were ordering for their shut-in, then they start delivering the groceries and start delivering everything else, all this stuff. Do you think you really think their profit's going to be up that much? Because they're not. Because they don't make money selling stuff. Costco doesn't make money selling stuff either. Costco makes their money off the membership. Amazon makes their money on selling their server capacity. Amazon makes their money on selling memberships to Prime and things like that. They lose money selling new stuff. So if they sold more stuff, they will lose more money. And it's going to be harder for the other divisions to make up for it with the sudden surge in stuff that they are selling. If this happened to Costco, this would be a disaster for Costco because they don't make money selling stuff. That's the loss leader that allows them to sell memberships. And for Amazon too, it's a loss leader that allows them to sell other stuff to you, like Amazon Prime, like like buying and enables them to buy Whole Foods and leverage their ability because Amazon Books, when they put a stamp on something, now it means something to you and people like it. So you see all those little Amazon bookstores at the mall. So you don't go to malls anymore, but there's Amazon bookstores there, and they sell knickknacks and they sell Kindles and they sell all this stuff. Fine, great, that makes money, but selling stuff and delivering it to you. A grocery store doesn't make any money selling you a box of cereal at the shelf. And how do they get the box of cereal? The manufacturer delivers a pallet full of boxes, or maybe there's a warehouse and they distribute it from their warehouses. But one way or another, very close to the grocery store, some truck full of Frosted Flakes pulls up somewhere, drops off Frosted Flakes, and at most that grocery store might have one little regional warehouse. That warehouse is going to drive a bunch of boxes of cereal over to the grocery store. And that's how it gets here. Then you go and pick it up and you pay for the Frosted Flakes and it costs $1, I don't know, $3 a box, whatever the hell Frosted Flakes cost. Boy, I'm out of touch, huh? I have no idea in the world what they cost, and I eat them all the time. Anyway, so whatever Frosted Flakes cost, you pay it, and the grocery store makes about 8 cents selling it to you. Okay, So Amazon's business model is that Amazon is going to have a central warehouse. They're going to have truckloads of Frosted Flakes delivered, just like the grocery store, but not in any greater amount than the grocery store. They're not getting a better discount than the grocery store. They're getting it for the same freaking price. Amazon does not sell more Frosted Flakes than A&P or whoever the hell is left in the business. So in Florida, it's only Publix. I'm trying to think of something besides Publix. It's the only grocery store we have in Florida. But Amazon doesn't sell more cereal than the supermarket does. They're buying just as much as Amazon is. They're getting the same price Amazon is, okay? But Amazon, instead of sending it to their local warehouses, their local stores, and you come pick it up. No, instead, they're going to take that box of cereal. They're going to take a person. They're going to pick it off the thing. They're going to put it on the thing. They're going to put it in a box, put packing material in the box, put a label on it, and ship it to you for free for the same price. How do you think they're making money on that? They can't make money on that. They don't make money doing that. It's not a real thing. It's just a lot of bullshit that they put together to get a lot of customers that they can make money on in other ways, like selling you Prime memberships or getting you to buy other things, or actually starting their own product lines where they can make some money. So they get you to start buying Kindles instead of iPads. They get you to buy there's foods that Amazon has. Whole Foods is putting out a whole 365 line now. It's gonna be called 365, and they're gonna sell their own brands of everything. Okay, they already kind of had that, but Amazon's putting it into high gear, and they're gonna sell you tons of stuff. So you're gonna get used to these Amazon branded products. That's their plan, is to become the wholesaler themselves and sell you the stuff wholesale instead of going through the grocery stores. You're gonna just buy the Amazon branded products because they're gonna give you a better price. And also, what Amazon is doing is the world's largest market research campaign. They are learning everything about you, the consumer, and they know what you want. And then when they come out with a product, just like when they come out with shows on Netflix and things, they come out with products that are tailored to you, and they know to advertise tailored to you, and it's very effective, and you're very likely to buy the things that they tell you about because they already know what you like to buy. They know what kind of buyer you are. That's where they make their money, being targeted, being effective, feeding that information to advertisers, selling all your personal information. That's where they make money. They make money on that. They make money on cloud services. They make money on Prime memberships. They make zero money selling you stuff. So why would selling more stuff in Amazon cause the stock price to go up like this? It doesn't. This is wrong. It's an incorrect reaction to what's happening. So those are fundamentals, and that's why there's no top trades. I'm not going to buy into this, and I'm not going to tell you to buy into this. I'm going to wait patiently for something to crash, and then we will decide whether it's crashed enough that we think it's interesting. But it's a very uncertain environment because, first of all, they could decide that the virus is a horrifying problem all of a sudden and call for more lockdowns, and the economy will crash, or they could suddenly throw more stimulus at us and the economy can go flying. No freaking idea what's going to happen one day to the next. Not a good time to make more trades. That's where we are. All right, so the uncertainty continues. It is July 8th, but earnings season is upon us, so we're going to start getting a little bit of clarity as to what actually happened in the second quarter. And hopefully it's not a complete disaster. And hopefully, let's see, what was the number? 3 million versus, okay, so 10%. We're gaining 10% a week. So let's see if next week we're at 3.3 million. Somebody remind me of that next week. So we're currently gaining 10% a week. It's more than 10% a week. It's like 15% a week because we went from 230 to 2.3. 2.3 is plus 7. So that's 30%, roughly 30%. It's more, so it's more like 15% a week. So we're gaining about 15% a week. So next week, let's hope we are not at 340, over 3.5 million. If we're not at if next week we're not at 3.5 million, I consider that a victory. Oh, wait. Was it 2 weeks? No, we took that into account. Frick, God, this is horrible. Okay. So seriously, our goal for next week is not to be over 3.5 million cases, to have less than 500,000 new infections next week. If we do that, that's better than we are now. because that's the pace we're heading at. And then you can start talking to me about, say, Phil, how come we're not buying more stuff when we only had 500,000 new cases in 1 week? All right, that's where we are. I'm sorry it's not better. It's almost funny because it's so tragic. Like the thin line between comedy and tragedy is right here, and we're walking on it right this minute because it's just so freaking ridiculous. And anyway, all right, I gotta wrap it up because I gotta go. I got some people I gotta call. All right, guys, thank you so much. I will do it again next week, and when earnings season starts next week, I hope we have some more top trades. We're gonna start doing that again, even though there's gonna be a rough ride. I'm telling you that right now, but at least we'll have something to trade. There should be some good deals. All right, thanks a lot, guys. Take care.